Hey guys, it's Rohan here. So today I'll start off with Ripple CEO Garlinghouse strong optimistic expectation on regulatory clarity coming from US government in 2023, and then I will look into what Ron Hamond, who is the director of government relationship in Blockchain Association, thinks of US government to do in 2023. But first, a quick look at the technical situation on XRP pricing and also Bitcoin pricing in the market. And if we have not met before, in this channel, you will find me every day with my analysis on crypto market and macroeconomic global issues. So do subscribe and let me help you keep yourself updated. So the entire crypto world is preparing for a highly unpredictable month with multiple events that could affect the worth of most digital currencies. XRP's value is also expected to climb due to an increase in buying pressure. The much anticipated ruling from the Ripple versus ACC legal battle could be the strongest stimulus, in fact. And since the FTX fiasco caused the market to drop, XRP's price has remained strong and recovered most of its losses. The token has been able to remain above critical support levels but continually struggles to increase beyond the resistance level. Take a look at this tweet from Ripple Van Winkle. He has more than 100,000 followers. So he tweeted that the price target for XRP, target 1 is 10 and target 2 is 60 to 62 region. The XRP lawsuit judgment might be the catalyst that sends it on another multiple X run in the coming months and years. Elliott's wave indicates a comparable level. So according to the analysis in this tweet, XRP is predicted to reach double-digit figures in the next 2 years. In the short term, however, price fluctuations are expected due to events such as FOMC monthly meeting, the CPI rates data that are coming, and I think these events could potentially have an upsurge effect on XRP prices. And generally, the entire crypto market is showing signs of improvements in anticipation of the FOMC meeting. In recent times, the FOMC meeting has had a positive influence on the crypto space and market prices have been responding accordingly. And Bitcoin prices have risen to some extent, but either has fallen back into a bearish pattern or remained stagnant in consolidation. The BTC price has been stagnating since its sharp decline in the second week of December 22 and is unable to go beyond 16,900 level. This has caused some concern of a possible pullback as the price keeps trading within a parallel channel and is unable to breach its resistance. The increase in selling volume has caused the possibility of an interim pullback to between 16,600 and 16,400 level. However, if it is able to break out of the channel, then a new high could be possible. And it is seemed that the instability in the market is obstructing the rally's advancement. The approaching FOMC meeting is thought to raise the markets to a certain degree, yet bearish forces will remain dominant. So if buyers increase their hold, then BTC price could soar past 17,000 level. If not, it is likely to stay consolidated below the 16,900 level. And the confusion between the bears and the bulls in determining the mid-term market direction should be settled with the imminent price action. And in this 4-hour chart, the 16.4K region has been a reliable support zone for Bitcoin on the 4-hour time frame over the last few days, with the price initiating a rebound after retesting this level. Nevertheless, the momentum is not strong as it's forming small candles, and there is a resistance level at 17K level on its way to 18K. That could lead to Bitcoin consolidating in between the two levels of 16.4 and 17K on a mid-term basis due to its weak momentum and fragile neutral sentiment. Alright, now more juicier topic happening in the crypto space, especially in Washington DC. So Ron Hamond, who is the Director of Government Relations at Blockchain Association and also the author of Token Taxonomy Act, writes a fantastic tweet thread where he explained what's happening in DC. So he says, this week in Congress and crypto, the first day of the 118th Congress has arrived. It is no secret the crypto industry is in the crosshair of Congress after the FTX fallout. The Congress presents challenges and opportunities, though. So here is the latest from the ground. One word to summarize how things are right now for crypto industry on the Hill, it's bad. SBF and FTX have significantly set back the industry in DC. Recall, SBF was on the Hill lobbying Congress and the regulators more than any CEO in crypto and likely any CEO in financial service. So when his fraud became apparent in November, members on both sides of the ASL and regulators quickly distanced themselves from him. The political donations from SBF led to an onslaught of negative press, and members have largely returned or donated those contributions. Meetings with policymakers and staff have also gotten tense after the FTX fiasco. As crypto crawled across the finish line in 2022, some of the crypto skeptics turned to an odd line of thinking that there should not be regulation because it will further legitimize crypto. So this camp thinks that if crypto is regulated, then traditional financial institutions like banks and so on, they will be able to hold crypto in their balance sheet, and that will create a separate line of dangers. But anyway, it's their thinking. Alright, so he moves on saying the problem for many in the DC is that they equate FTX with the entire crypto industry. This is not solely the fault of FTX though. Celsius, Terra and Three Arrows also led to this thinking. FTX though seems to be the straw that broke the camel's back, as many are calling for action. Dodd-Frank, Glass-Steagall, Sarbanes-Oxley, these were all major bills passed after a financial crisis or a serious scandal. It is entirely possible FTX downfall spars this once-in-a-decade legislation. Already we have proposals like Loomis, Gillibrand and McHenry Waters. These historic regulatory bills, though, take a lot of political capital to move, and nothing increases the chance of passage like a crisis. If this effort were to come together, and that's a big if, then likely would be a combo of new and old bills to tackle a variety of topics. Most of the first months of Congress will focus on FTX though, while stablecoins seemed like something that would be tackled first. It seems FTX fact-finding will skip the line and become the center of attention. Stablecoin regulation is still top of mind for many though. There is also a unique dynamic with split Congress. Typically, a split Congress rarely passes many bills, as both sides fail to see eye to eye on the bills, or their priorities are not shared with the other side. A crisis can change that, but that is not guaranteed. And he goes on, this split is best seen between Patrick McHenry. So Patrick McHenry is the chair of House Financial Service, and Senator Sherrod Brown, who is the chair of Senate Banking. Both have nearly polar opposite views on crypto, and it is hard to see a situation where they can agree. It is possible, but will be tough. On the other hand, the Agricultural Committee tend to have a better relationship with Congressman GT and Senator Stabenow as chairs. Both have put out proposals on regulating crypto via the CFTC and spot market regulation. While different, both could agree. What else can we get? Oversight of regulators for certain. Chair McHenry said that he plans to have SEC Chair Gary Gensler in several times for oversight hearing this Congress, an opportunity the House didn't get last year. The CFTC will have similar hearing in agricultural committees. Smaller bills like stablecoins and spot market regulations have a chance of moving this year, but will likely need to wait till the dust settles on FTX, both in the courts and the congressional hearing. Similar to the Robinhood hearing, more legislation will be proposed after. It is likely Congress will tackle new topics this year such as NFTs, DAOs and DeFi. Some of these topics have been included in previous bills, but the interest in those topics have picked up in recent months, largely due to recent enforcement actions. To end, it cannot be stated enough how much damage SBF did to the industry's reputation in DC. Trust has eroded, the contagion is still playing out, the skeptics are growing, the crypto savior complex continues to fail in DC. Like the ecosystem, we work better as a team. The good thing is crypto has a strong bench in DC and continues to poach talent from other industries on the advocacy, lobbying and policy front. The industry has done a great job realizing this is crucial time in Congress and is putting in resources even amid crypto winter. What was once a group of less than dozen people from Coin Center, Blockchain Association, Coinbase, plus a few other groups fighting the infrastructure provision has now become a network of 100 plus policy experts. These people and the knowledgeable Hill staff make me optimistic for 2023. Alright, yeah. So it's nice to hear his last tweet. And on similar topic, Brad Garlinghouse, who is the CEO of Ripple, also writes a very interesting and nice thread. So he writes, today is the first day of 118th Congress. While prior efforts at regulatory clarity for cryptos in the US have stalled, I am cautiously optimistic that 2023 is the year we will finally see a breakthrough, a thread on why. Okay, so he goes on. We are not working with a blank slate. Prior bills have tried to address everything from stablecoins and CEXs, for example, RFIA and DCEA, clearer definitions of what constitutes a digital asset security under the Securities Clarity Act, and safe harbors, clarity of Digital Tokens Act, and more. And no bill is perfect, and there likely never will be one that satisfies everyone, but perfect should not be the enemy of progress. These proposals provide more than a starting point for debates in the new Congress. The stakes couldn't be higher. Singapore, the EU, Brazil, and Japan all have crypto frameworks, and the UK is well ahead of the US, but the lack of coordinated standards globally or any in the US continues to push business to countries with lower regulatory bars or with sometimes catastrophic results, that is FTX. Then he further says, changing the status quo is never easy, but I believe that the will to act exists. The building blocks for regulation have already been introduced, and we have a chance to get this right for millions of Americans who already are and will continue to be interested in crypto. The 118th Congress has a historic opportunity before it to ensure the US remains an innovation leader for decades to come. We hope it's one they take. So for sure, 2023 will have a lot of regulations coming on our way. In August 2022, the Treasury Department added sanction against Tornado Cash, which is a decentralized Ethereum crypto mixer. SEC versus Ripple will be in the center stage, taking all the attention in 2023. But beyond that, bankruptcy courts are also likely to settle cases involving Three Arrows Capital, then FTX, Voyager, Celsius, as well as other companies who are the victims of the collapse of those large companies. And this will probably set legal precedents in the industry. Then FINRA has begun compiling data on crypto marketing technique, which may lead to new regulations. Representative Patrick McHenry, a sponsor of a bill that would allow the Federal Reserve to license stablecoin issuers, labeled it as a pretty ugly baby because of a conflicting views concerning who should regulate stablecoin issuers. This year, the Biden administration report on stablecoin suggested regulations for them, and 2023 will actually see some progress in this regard. If Federal Reserve gets to regulate stablecoin, then stablecoin issuers could borrow money from the central bank or insurance coverage from the FDIC. Its wording could affect major US stablecoin issuers the likes of Circle and Paxos. And talking about regulations, this news coming from Indonesia is of importance, that Indonesia to launch crypto exchange in 23 to be regulated as a financial instrument. So what they're saying, 23 will be key reform. We'll see key reform in Indonesia's crypto industry. As part of the reform, the island nation will launch an exchange later this year, which would be launched ahead of a major shift in the country's crypto industry. So the Commodity Futures Trading Regulatory Agency of Indonesia, also known as BAPEPT, will relinquish its oversight of crypto assets to the Financial Service Authority, which is a securities-focused agency. An official from Indonesia's Ministry of Finance reported that the shift of regulatory power from commodities to securities agency was warranted due to status of crypto assets as investment vehicles, he added. In fact, crypto assets have become investment and financial instruments, so they need to be regulated on an equal basis with other financial and investment instruments. Yeah, so this is something. And ending this video with a little bit positive news coming from a Ukrainian pharmacy industry. So Ukrainian pharmacies enable crypto payments via Binance Pay. So ANC Pharmacy, which is one of the biggest pharmacy chain in the country, has partnered with Binance Ukraine to debut cryptocurrency payments via contractless crypto payment service Binance Pay. The pharmacy chain operates more than 1,000 pharmacies across Ukraine, running its own online pharmacy service. So it is expected all these 1,000 pharmacies chain you will be able to get your medicines by paying with crypto. So according to Komokov, crypto payment via services like Binance Card do not conflict with Ukrainian laws because there is no ban on crypto-derived transactions in the country. At the same time, local laws do not allow direct payments in cryptocurrencies like Bitcoin. That pretty much wraps up this video. If you liked it, do smash the like button, and also don't forget to subscribe. See you in the next one.